how's this going to affect me? Well, let's ask Spencer McGowan from Net Worth Radio. Spencer McGowan, to the people listening, how is this going to affect them?
Well, it's disruptive, I'll tell you that. And the 401ks didn't do well today. The Dow's down 4% here at the close. That's down 5% year to date. The tech stocks just got slammed. They were down 5% today, down 12% so far this year. So that's that's a setback for the 401k. The disruption was much bigger than expected. The pattern had been Trump would make an outrageous, bold announcement, and everybody kind of learned that would be a negotiating tool. But yesterday, the markets actually closed up. Well, by the time he finished with this barrage of tariffs, most of them unexpected, then you saw, the Dow down 1,100 points while he was speaking and finally down over 1,600 points at the close. There's going to be some serious disruptions, but there will be a boom in domestic manufacturing as soon as they can figure out what, where, and how.
Well, we do have, the S&P 500 is now back into correction tory. NASDAQ's been there. Dow kind of next to the S&P 500. We've seen this be a bouncing point, though, where it got 10% down, and that seemed to be when it got a mind of its own self and turned back around. How much further do you think this one can go?
You could have another, if we use the Dow, maybe another 8%. The S&P has a lot of tech stocks, and that could be another 10% because the tech stocks got way overpriced. The other part is how you're going to have to triangulate how this affects every different company, right? Vietnam does a lot of exports to the United States, and their tariff was 45%. I think it was shocking, the level of tariffs, and it was just all across the world that fast, and it was something that really hadn't been telegraphed at that scale. So you do disrupt the economy. You are likely to fulfill a definition of a modest recession, and at the same time, to your point, you probably do have some more downside, but it's really driven by tech. You can see a lot of the dividend companies held firm today. So, and the S&P Oil and Gas Index, which is big dividends, that's up 4%. So there's bargains out there, and, they don't ring a bell when it's over.
Yeah, I hear you on that one. So how many countries have capitulated already? Because I really think that if a bunch of countries decide, well, we're not even going to fight this anymore, we're just going to go ahead and give the man what he wants, that this could all be resolved within a month, maybe 3 months. We won't even think about this anymore.
Well, the potential good news from here is the deals do come fast and furious, right? So if you do get positive announcements, so, like last month they delayed Mexico and Canada. If you do get positive announcements and a recension of tariffs or a moderation, then you'll start to see the selling pressure moderate. But, to me, you're really at the peak of the fear index right now. So we were doing some gradual buying today. The 10-year Treasury, the institutions just bought treasuries with both hands today, and the 10-year went to 4.05. That's good for mortgage rates.
There you go.
And, that says you're near the maximum fear point. So my dad and I are getting together right after this to brainstorm what we want to own and what level, because by the third quarter, you've adjusted for the tariffs. And to your point, you've negotiated and gotten great concessions for the United States.
I bought the last dip that happened about a month or so ago when it drove down and bounced off of correction territory. And I went shopping. I missed out getting on NVIDIA years ago, so I got a good deal on it about a month ago or so. I think the smart people are going to be shopping here in a few days.
Well, and this is, these are the times that you add. And when everybody's euphoric towards the end of the year, we were harvesting stuff, especially stuff that wasn't working like we thought it should.
Harvesting, selling off your profits and losses there?
Yes. Yeah. And any bad behavior resulted in more cash. But in this case, this is much more disruptive than expected. And as the moderation takes place, then you start to see some bounces. But this was horrifying compared to what most people were expecting, especially those in the free trade camp.
Well, there's a lot of discounts out there. Like NVIDIA is down almost 8% just in one day. So if you're wanting to get on that train, or like Airbnb was down 7% today, and all these companies that you've wanted to get in on, this may be your chance. What are y'all talking about on Net Worth Radio this weekend?
Well, I printed up the tariff stories because a team prints all the stories they find that are good, and I do too. So I went through the stack, and like a third of it is clarification on these tariffs. Everything from poor little Vietnam's 45% tariff to China 34%. So we're going to unravel that and start to triangulate some impact. The other would be the economic contraction that's been forecast by the Atlanta Fed and what that really means. Part of it was the government spending that did not take place after January 21st.
All right. Well, that's all good stuff. Spencer McGowan, Net Worth Radio. I appreciate your time. You can find him on the weekends here on WBAP. What time do you come on?
Great show, James. It's 4 p.m. on Saturday.
Or if you need a financial advisor, he's over at the Crescent, which is kind of walking distance from where I'm at right now. Let's talk about something that, kind of seems unseemly right now, but is a very important question. How does this affect the world politically? Anthony Russo is my next guest from the Truth Will Set You Free podcast. And I think the concern here, Anthony, is that if this does take the economy, if this doesn't resolve, if we don't see a bunch of companies capitulate or at least negotiate new deals, and we go into the midterms in recession conditions, that is not going to be good for Team Trump.
No, absolutely. And I said this before the election, and I still continue to say it. We were going to be in for a rough patch financially, depending on how things were treated from a media perspective, how much hate was still visible in the nation, how much political strife. I didn't quite know that tariffs were going to be the number one thing that was going to be driving the economy, but I knew something would. I knew that the first 6 months were going to be a little bit bumpy, and I think that right now the question, like you said, is it 6 months of pain or is it 18 months of pain? And if we're going through this still as we lead into the midterms, I think we're going to see, again, another very, very quick political shift because it's going to be very easy to blame the economy issues on the Trump administration.
Yeah, and I don't think there's really an upside for the Trump administration because if everything goes well and other countries capitulate and we start getting more fair trade deals, if not pure fair trade or reciprocal tariffs, something closer to it, it's not like he's ever going to get the credit. It's not like MSNBC is going to come on and say, oops, we were wrong about all of that economic scaremongering. Sorry about that.
What's wild is they played a clip from Oprah Winfrey in 1988 when Trump was on there, and he literally was outlining the issue with our tariff policy in the United States and all the issues leading into our debt and how it's just going to keep getting worse and worse and worse. And here we are. I think he saw the risk. This is the thing. I think he's making the right move. I have friends that are on my side that don't agree with tariffs, and I can understand why. I think that this is a little bit of a gamble, but the gamble is necessary in order to save the United States of America's economy for a generation or two to come. I think that that's how big of an effect this will have. So he knew he was going to do this. He couldn't do it during the first term because there is the risk of an issue with reelection because it could go bad for an extended period of time. I think the long-term gain is always going to supersede the short-term pain. The question is the short-term pain 1 year, 6 months, 3 years, 4 years? That's the big issue with all this.
Yeah, and he did do a lot with tariffs in that in Trump 1.0, and it all seemed to work itself out pretty fine, but not everybody. And so I kind of like the idea that, he doesn't have to worry about re-election now. He doesn't have to worry about another term because that's not happening. Really, all he has to worry about is this midterm thing that's going to happen in about a year and a half. And if we get it resolved before then, no one's going to think about tariffs in November of 2026.
True. And I was a little bit of a conspiracy theorist. I know it's shocking. During the first presidency, when he did the tariffs on China, and again, this is reciprocal tariffs. I do want to say people should go look up how much we're tariffed from other countries. It's mind-boggling that we're even going, wow, this is rude of us to do. And it's double most places, if not triple. But in the first presidency, I do believe, I kept saying, man, it's crazy that we put a tariff on China that was unprecedented. And here we are with COVID, which destroyed the world economy for a period of time. So I almost had the belief, without confirmation, that something with our tariffs to China and essentially puffing our muscles that way might have been part of the reason that we had the demise that we call COVID.
Ooh,
it's a stretch.
Yeah,
but I could see it.
It's hard to argue because, in hindsight, criticism is just so easy. So let's talk about the political fallout that already happened this week with the special elections. Anything Team Red needs to be especially worried about, or lessons they could learn from? Because it was kind of a split decision from the elections that happened in Florida and Wisconsin.
Yeah, the Wisconsin one was definitely something to watch. And you look at, you got Elon Musk and you got George Soros, two heavyweights that were essentially competing with their money for Wisconsin. And especially in a state that ended up being red, it was very surprising to me to see what happened with some of those special elections. And it shows that right now it is about messaging and money instead of just money, because I think that Elon Musk could have blown him out of the water and it just didn't work out. And Soros somehow won that.
All right, talk about what you got going on these days. Are you still doing Truth Will Set You Free, or have you moved on?
Well, I'm still doing the one-outs here and there on Instagram. I still do rants when I feel the need to do it. I actually interviewed the guy from the California wildfires, the one that had the leaked audio to Karen Bass. I did that a couple weeks ago. For the most part, though, just trying to spread some positivity, because the world is garbage at this point. So doing the best I can with positivity-type videos.
I think the world's fantastic. What are you talking about? Anthony Russo, thank you very much, sir. Appreciate it. Everything's going fine. Everything's fine. Sometimes Teslas catch fire. Other than that, things are fine. Should your taxpayer dollars be used to subsidize Hollywood? Because it seems like the Democrats and Republicans are both on board. I don't mean all of them, but on average, I think both Team Red and Team Blue in Austin are in favor of this somehow. Very convincing, very persuasive guys were helping push this through. Matthew McConaughey and Woody Harrelson, two Texas boys who, I don't know. Are we all fans of them? I'm definitely fans of Matthew McConaughey and Woody Harrelson. I love both of those dudes. All right. I could do the Wooderson impressions if you want. But let me give you a little taste of him talking, when I say him, of Matthew McConaughey in front of your Texas legislature, making the case for $2.5 billion of your taxpayer dollars going to filmmakers.
With 12 weeks still scheduled to shoot. Now, most of you know me or know of me. I was born in Uvalde. I was raised in Longview. I went to college up the street at University of Texas. Made my first film here. Then I went off to Hollywood for $2,000 in a U-Haul and made a career of making movies. And I still reside here with my family in Texas. Now, one of the only regrets of my 33-year career in film and television is not making more of my films here in Texas, especially the ones that were about Texans or set in Texas. Now, it's my understanding that the rub against a film incentive in Texas is more philosophical than economical.
No,
you don't want to help a movie get made in Texas that throws rocks at Texas or Texans.
No, that's not it.
Me neither. Somebody wants to do that, let them go shoot in some other incentivized state like Georgia, Tennessee, Louisiana, or go to Malta and do it. But not here. I'm with you. So let's talk about the opportunity that we have with this bill.
All right, so let's talk about, obviously, that's a negative impact on the people who want to try and get you to pay for their business, is to kind of gloss over the fact that they're going to make a bunch of movies that make you look dumb, make you look bad, make people dislike or distrust you. It's going to slander your culture, your heritage, your religion, your country, your history. I mean, that's part of it, and that makes it ugly. But even if they were all pro James Parker movies, if they were all movies that were pro Texas, economically speaking, it's still dumb. And I don't have to just throw pejoratives at it and insult it. They have done this in other states over the course of decades. We have many experiments where we can choose from. And Matthew McConaughey or Woody Harrelson or whoever else is for this doesn't go back and tell you how it worked out in these other states. One of the big ones was in New York. Now, most of the films that were subsidized there were for New York City. Didn't really help the rest of the state that much. But after they've had it for over a decade, they had a private firm, PFM, whoever that is, come audit their Hollywood subsidies, their filmmaking tax credits. And they said it does not provide a positive return to the state in terms of direct state taxes. For revenue, for every $1 in tax money that they gave to the film industry, they could connect it to 15 cents in direct tax revenue. Now, if you wanted to go ahead and say, well, what about indirect stuff? And by indirect stuff, I don't mean like someone bought a movie prop or paid an actor. Like, what if they bought pizza for the people that were working on the set and the taxes that were paid on that pizza? Well, that's really stretching it because those people that are there, they were going to eat lunch anyway. So you didn't generate any new tax revenue from lunch unless these people were imported. So for all the locals that were hired there, which we're told this is for locals, this is going to help create jobs here, not for outsiders. This isn't going to help the outside world. It's going to help. So even if you stretch it to include like the tax that they get off of lunch for the people that work on these, you only get to 31 cents of tax revenue. So for best case scenario, every dollar that's invested loses $69 or 69 cents. That's just a coincidence. I didn't fudge that math to make it happen. They did it in Georgia. And in Georgia, they could only find that they generated, even with the stretched number, 19 cents for every dollar spent on their tax credits. And when you look at all the jobs that are created, how much tax revenue per job created? Auditors in the Georgia audit said each job worked out to $160,000 per taxpayer loss for each job created by the credit. So is this a good deal economically for the taxpayers of the states where this has already been tried? Absolutely not. I think the low-hanging fish is saying you're subsidizing people that hate you. Sure, you are. I mean, that should be a deal breaker to begin with. But on top of that, no, it's not even economically smart. I wouldn't even support this if it was pro-Jesus, pro-Austrian economics, pro-Constitution stuff. So the conservative and libertarian case against tax breaks kind of stands firm here. Because what you're still doing is you're allowing the government to pick winners and losers. And in this case, the Hollywood filmmakers, that whole industry, their constituents, they're going to win. You're going to lose. Make the case. Lower taxes, getting a tax break, incentivizes economic production. Not arguing against that. But now you're making a case on why you should lower everybody's taxes, not stifle all other industries except for your preferred ones. You're handing massive power to government wonks to hand out your money to their preferred industries, their groups, their businesses, their cronies, their voters. So there's way too many perverse incentives that have come from this. It hasn't worked anywhere. It's been tried. We shouldn't do it here. Period. Point blank. End of story. Sylvia and Garland, you're on WBAP. What do you think about subsidizing movie making in Texas?
I'm not usually for subsidizing, but on this one I am, and this is why.
Okay.
We had the movie making industry here in Texas. I got to be in a film with Meatloaf over in Irving. We have the infrastructure still there. We had a legislature that refused to do the tax incentives and the little bit of subsidization to keep them in Texas, and that's how they ended up in Georgia. So
good. Let Georgia pay for it.
We have so many dance schools, acting schools. High schools turn out artists, and they all leave the state because they can't work their craft. Like McConaughey said, he had to leave the state to work his craft. He was trained here. We lose talent. We lose the dollars of them buying their homes here. There is more than just that tiny little finite economic thing of direct return. It's like a pebble in the pond.
Okay.
And we need the film industry back in Texas again because we need some branch of that industry to be there for the independents that cannot get made in Hollywood because their viewpoint is different from Hollywood. We've got to get some of the U.S. film industry out of California and Texas. We should be at the forefront. And if it takes a subsidy to get them back in here, maybe there's some way to make it a limited subsidy, a limited time thing. I agree with you. We shouldn't We got to get that industry back.
Why?
Because we're losing talent.
But you could listen. I'm sorry to interrupt you here. I'm just running out of time. You could say that about any industry. You could say that about people who make steel. You could say that about cattle ranchers. You could say that about talk show hosts. If we had a big giant subsidy for talk radio, you would see all the talk show hosts move here.
But you're not having to produce your show every day with no remuneration back financially after a 3 to 6 month period of time. I mean,
you're not making an economic argument. You just like movies, and so you want them here because you think it's cool. You're not making an economic argument.
Well, not because. Well, the economic thing on a lot of things that we subsidize doesn't work out. So there, I'm with the libertarians, except.
Except for this one, because you think it's cool, because you got to meet Meatloaf and you think movies are awesome, and we all do. We all enjoy movies. I'm not going to be a hypocrite and say I don't watch Netflix a lot or have never enjoyed a Wooderson line, but that's not an economic argument. You just like them is not enough.
Well, no, it would be a good thing for Texas to bring the...
It would be a loser for Texas. You're taking money out of the cash registers of small businesses and large businesses and private bank accounts in Texas to subsidize these movies. It's a zero-sum game when you talk about subsidies. For every dollar in Texas that's going to go to the movie industry is 2.5 billion fewer dollars are going to go to all the businesses that are already here not being subsidized. The corner store, the private teacher, the amusement parks, the restaurants, the accountants, everyone, your stores, everything is going to suffer in Texas to the tune of $2.5 billion that's being flushed down the toilet. This is only good for movie makers and people in the movie industry at the expense of everyone else.
I see more than just a dollar sign being beneficial for people.
That's what I'm saying. You just think it's cool. It's an economic loser. You just think movies are cool, and that's your argument. Well, we should take a big financial loss, and the taxpayers of Texas should just take it upside the head for $2.5 billion because you think movies and the movie industry is cool, and you don't want the movies to be made in Georgia. Let Georgia go subsidize those demons. Well, the markets seem to be going down, and then a couple of bumps up, a couple of little rebounds. And yesterday they seemed to be rebounding until Trump gave the speech. And it's been kind of red since then. In fact, today was sort of brutal. NASDAQ is now down almost to bear territory. They're 18% off of their high from a couple months ago. Are we headed to a recession? Let's ask my next guest. Bill Dindy's back on. Hey, Bill Dindy, welcome back to the James Show. Glad to have you on, sir.
It's always a pleasure to be with you.
All right.
Unfortunately, I'll always seem to be with you when there's bad news in the stock market. And my gosh, the worst day we've had since 2020. A lot of people are very concerned now, saying, ouch, this was fun until just now. The market seems schizophrenic since November, not knowing if they should go up or down. But this down and down again, where we see 15 to 20% reductions from the all-time highs, that's got a lot of people concerned.
So what do you think is the likelihood of a recession in the next calendar year?
Well, we're seeing a lot of things that look recessionary. We're seeing things that are not long-term necessarily positive, but Trump has taken a big gamble here. And the gamble is that the tariffs will bring in revenues for the U.S. government. It will drive manufacturing back to the U.S., bring jobs back to the U.S. And he said early on that there's a little pain for a lot of gain, and we got to be able to sustain the pain. And when he said he was not going to look at the markets or doesn't look at the markets, he looks at the markets. First round, he looked at the markets a lot as indications of positive actions. So I think that it's no surprise to see when you wait to make an announcement until after the market closes that you anticipate the markets are not going to love the announcement. And when you make the announcement weeks ago that there's going to be some pain in this, we should expect there to be. I think that for a lot of folks, though, they thought that Trump was negotiating with Canada and Mexico, and once we tightened up the border and did some other things, that the tariffs would go away. Yet yesterday, he seemed to indicate 10% across the board and much higher reciprocal tariffs for those who had high barriers to entry for U.S. businesses, and that would be permanent. Yet, to what level are we permanent? I think that's part of the overall Trump negotiation strategy.
Well, let me see if I can pry some free financial advice out of you. Bill Denny, let's say I call in and I'm your client, you're my financial advisor, and I say, hey, boss, should I be making any moves right now with my IRA or my 401k? What would you tell me?
Well, if you're my client, we've already had this discussion before the impact. I mean, it's one of those drills that you have before the emergency, before the changes. We talk about ahead of time, are you looking to invest in because you believe the market's on sale? Or are we long-term investors? And the ups and downs, we expect the market to have down periods because no one's ever drawn a straight-up market line. So I've had people call and say, hey, is this a buying opportunity? It's less expensive. I'm like, yes, it is. We're 10 to 20% off where we were. But that's not a real sale. That's kind of like that 10% you get when you fill out the credit card application. It's nice, but you don't drive across town for it. That's an extra bonus. If you were already going to do it, it's nice to have it at a discount. The real sales are the 30, 40, and 50% off. And yes, we've had 50% off sales in the market. The 2008, 2000, 1987, we've had those periods where the things get such on sale. It's like, but you know what's crazy? Times like that, people are afraid to invest. So when you really do have the thing going on sale, a lot of folks will say, yeah, I thought I might want to do this. Let's just wait and see. And then they miss the opportunities.
Yeah, it also means you got to have cash on the sideline. And some of us just aren't that well disciplined, Bill Dendy, if we're going to be timing the market. I'm out of time. How can they find you online, Bill?
AlicornInvestmentManagement.com. ALICORN. It's a unicorn that flies.
There's Bill Dendy, D-E-N-D-Y. Thank you very much, sir. Coming up next, special guest of the day, Frank Caliendo. Frank Caliendo, the comedian, the impressionist? Yes. In fact, I'll tell you where he's going to be tonight if you can still try and get a ticket. Stick with the James Show. That's coming up next on News Talk 820 WBAP, now on FM at 93.3.